Welcome, everybody. My name is Michael Comeau. This is the T3 Alpha Show podcast, and today we are speaking to James Hornick. Now, James used to be in the world of corporate recruiting, and then sounds like he wanted to do something a little slower, a little simpler, less risky. So he went to 0 days to expiration options trading.
Yeah.
So
it's totally boring. Yeah.
Most people associate, 0 days to expiration options with gambling, essentially. So why are you in this area of the market specifically?
Okay, so let's back up a little bit, and so I can kind of lay some groundwork here. First off, I've been trading on my own on the side for over 10 years now. So this is like a new thing I got into or whatnot. So it's kind of the first thing. And it's something I always kind of wanted. It's always like in the background, something I was always been passionate about. I think there's two things. I think that 0 day options trading gets unfairly lumped into YOLO trading with the meme stocks or crypto or stuff like that. And I get it because there was one point in time, especially when it first came out, there were a lot of people on the Wall Street bets that were kind of getting into that kind of stuff. But the thing there's two things I think people need to realize about 0 day trading. First of all, it's the mainstream at this point. Last I checked, I was actually looking at this before, I was kind of jumping on here. Almost 60%, I believe, as of beginning this month, of all SPX options trading is 0 day. It's just a time domain. There's nothing different about it versus 1 day versus 30 day versus 60 day. It's just become the more popular way of doing things. And I want to kind of get into that and why specifically. But secondly, it's not that for people like myself, I take a very quantitative approach, a very systematic approach, very automated approach. Everything I do is research and back test. I spend most of my day doing research and back testing as opposed to actually trading because it's all automated. The big difference I think that people don't realize is people who take that kind of approach, and the tools actually exist nowadays for you to back test and stress test and do Monte Carlo simulations with everything that you're trading. That didn't exist that many years ago. Like if you were a software developer, maybe you could have done it on your own, but there's not many people who are traders and software developers and strategically minded, whereas there's really great off-the-shelf software nowadays for both backtesting and automation. And that's kind of a new phenomenon. And I think that's really the thing that changed and why people like myself that kind of do this now, as opposed to it's because it's 0 day options. I know people who do the same type of thing in other time domains, you know what I mean? So I still think 0 day is better, but that's another part of the conversation.
Okay, so a lot of people trade options with, buy calls, I like them, buy puts if I hate them. So have you always had a quantitative, logic-based brain?
I think so. If you see my background, my past world, my past life, I was in sales and marketing and recruiting. I was a chief growth officer for a recruiting firm. But I'm also the kind of person that liked to configure the CRM and find new ways of doing things and problem solve and stuff like that. So I never went down professionally down the more kind of math and science route, but I've been kind of wired that way. You know what I mean? I've always if there's a problem, I always want to kind of find a new way to solve it. So yeah, I think that's probably a prerequisite for for someone wanting to get into doing trading seriously, but it's just.
Okay, but it also seems like you have you have a very creative mind because you're a writer, you have the business bullshit podcast. So before we get into the creativity side, when were you did it take you time for you to be convinced that 0 day options were not bullshit?
Because no time at all. So I can actually give credit to where credit's due. So friend of mine, my trading buddy for the past 10 years, I still remember, he sent me a video and it was one of the Tasty Trade Rising Star videos. And there's a guy named Mark Anderson, 0 day Mark. A lot of people know him in the 0 day community. Probably the biggest person on YouTube. And you see a video of someone having this much success, you're immediately thinking, okay, this has to be bullshit. But then I started looking at what he's doing, and everything was back tested. Everything he's showing his work, and then I went and purchased the back testing stuff. As soon as you actually can come up with ideas and back test them in a systematic way, and then once you forward test them a little bit to see, okay, this is actually work. It's not just some big fugazi and someone sold me junk software. It didn't take long at all to realize this is just more lucrative. And I think I didn't answer your first question of why 0 day specifically, because it's the tools, it's the resources. But I think there's really 3 key things on why 0 days better, why everyone, not just retail people, but institutions are going towards 0 day trading. Actually, institutions are probably doing it because for more risk controls. But for individual people, I think the biggest thing is the buying power recycling. Like if a trade ties up $1,000, $5,000 in buying power and takes 30 days, then you can't use that buying power again for 30 days. But if you use it for one day and then you can use it the next day, then you can use it you can make 30 times as many trades. So if you believe in the law of large numbers and you believe in getting as many currencies as possible with the same capital, you can get exponentially more trades in at bats by doing 0-day trading versus doing something else. And that's without even getting the fact that like that's when the most theta decay happens. So it's also where you get the most bang for your buck. So it's the combination of having the tools and technology, but also having something where you can actually rapidly compound and rapidly get feedback, but also more importantly, like use your capital in the most efficient way is why 0-day trading is really taking off in the retail crowd.
Okay. And you're the total opposite of the I've got a feeling crowd. So is everything
I have no feeling whatsoever.
Okay.
I've never made a gut call about what I think is going to happen.
No, because I always find that interesting because I speak to lots of traders and investors that will have like this this giant list of rules and stuff, but they break them all the time, specifically because they got a feeling, JP Morgan's reporting earnings, better get some calls. So your trading is 100% automated?
100% automated, yes. I use Trade Steward as the platform that I use. There's several other good ones out there. So
okay, so interesting. I see you're a sci-fi fan. Now I grew up with like the Terminator and RoboCop, so my natural assumption is the systems are going to go off the rails and do something crazy. Did you have any trouble actually trusting the automated systems to do what they're supposed to do?
Not really. I mean, like everything, I started out, when I started using it, I started small, like I just made a few trades to make sure I kind of understood kind of how it worked. But once you get into it and you realize how, the system that I use, I was extremely impressed with their customer service. I mean, they're literally online chatting in a Discord chat that has a whole ticketing system and fixing stuff in real time. So everything seems to, I mean, you have to learn how to use it. You still have to take it upon yourself to make sure you're setting up and configuring things properly. But, no, I've had nothing but good experiences. So
okay.
the things that do worry me are, there are a lot of steps along the way. You know what I mean? There is the exchange, then the exchange connects to there's the APIs to their brokers, the market makers, and then there's the cloud software that your automation may run on. So there's a lot of kind of like steps in the chain. But if you set your trades up with the right risk controls up front, where if something does crash, you've already taken that into account. So if one of the parts of the chain breaks, like the worst case scenario is you're not getting more trades on, but that's fine. You know what I mean? So,
okay, yeah. And just so we're clear, like I'm not going to ask you here to like give your secret sauce specific formulas,
sure,
anything like that. But like when you're doing your back testing, how do you know when something is worth putting money behind? Because I mean, people have been back testing for ages, and the thing I always wonder with back testing is like, how do you know which factors to back test? And then like, because like the thing, now correct me if I'm wrong, but like, aren't the factors that matter in the future, like be different from the past? Like, do you know what I'm saying?
Totally. Things, past performance is not an indication of future results. Like that's 100%. I think you have to look at back testing is not a guaranteed success, but it tells you what doesn't work, which is, I think, the most important thing. Like things could go off the rails in the future. Things could fundamentally change about like how the market works or what happens. And we admittedly in the 0-day crowd, like we have limited data because, 0-day options only went back to May 16th, 2022, which isn't very far in the grand scheme of things. Like there were 3-day-a-week expirations before that, and Friday, you can still kind of test those things. But you are kind of working on some assumptions where data is limited, but you absolutely can tell what doesn't work, which I think gets you 80% of the way there. From that standpoint, then you're just forward testing. Like, one of the metrics I look at is something still holding up over time is like the PCR ratio. So like, premium credit retained, I think. When that changes, when all of a sudden you have a strategy where, you're on average keeping 20% of what if you're premium selling what you kept, and all of a sudden that dips to 10, like something's wrong. You know what I mean? Something's happening. It wasn't a very robust test. But, it has to be kind of in the forefront of your mind that, back testing can go wrong. It can change. It will change, which is why you always need to make sure you're always kind of checking your ongoing results versus what happened, previously, and just making sure that's still aligned.
Okay. Are you constantly testing new strategies?
Always. Oh, it's most of my day. Like most of the day I spend working because the trading, as I said, it's automated. So I'm trading right now. There's things happening. I'm not actually pressing buttons. But what I am doing, spending my trading day on, is usually collaborating with people, learning new systems, reading books that have nothing to do with zero-day trading to try to get other ideas, and learning more about long vol and learning more about things that are kind of outside of what I've always done traditionally. But backtesting is still kind of probably 2/3 of it. The other thing I wanted to say too is you also I probably have didn't check this. I mean, I probably have 100 different bots on, and those are multiple tranches, but I have about 20 to 25 strategies right now that I use and deploy that'll fire in different kind of market conditions, and so it's very much an ensemble approach. Like I try to reduce correlations, I try to have some inverse correlations, and you're betting that like they're not all going to win the same day. So, but to your question about like what happens if like things don't match the test, the more robust different strategies you have as an ensemble, the more likely they are to kind of continue in the up into the right path. So,
okay, so do like new ideas ever come to you at strange times? Because like, are you ever like in the shower or on the golf course, and then some random thing just pops into your head? Maybe, I don't know, I'm just making this up, but maybe time decay accelerates at 11:37 a.m. Eastern time, or something. Like, do the ideas ever come to you randomly?
I think so. Yeah. I mean, the other thing too that I did mention is a lot of it. I think that the biggest advantage that actual trading firms have had and still have isn't even necessarily the technology. It's the fact that they have a lot of people working together, rowing in the same direction as a team that can bounce ideas off each other. And the other thing that's interesting too, as I've kind of gotten more into this, is all the different technologies that are out there, whether it's Trade Steward or Option Omega, or there's a ton of communities on Discord of traders doing the same things we are, and just getting to meet people who think the same way, are open to collaborating. Like there's 4 or 5 people I talk to every day of the week now that you're able to run ideas off of. And a lot of times inspiration isn't just coming just out of the blue. It's like someone had an idea, maybe it wasn't good, but that gave you an idea to improve it, and you work with them or figure it out on your own. And I think that has been also kind of one of the key things too, is like finding more people that can help you kind of collaborate to come up with those kind of ideas.
Okay. And do you find that many people are actually open? Because I think a lot of people, or I would think anyway, correct me if I'm wrong, a lot of people would want to protect.
Yeah, yes and no. I think that the two things I've learned about traders: one, they are the most dismissive people you'll ever meet in your life. Like I think they're so pot committed to their ideas, they have to be right, especially if they make money for them. Like they're so stubborn to admit that it might be a better way of doing things. You get over that. And I think that's the one thing about myself I always have to check is like, hey, maybe I'm wrong about something. There's a better way of doing it. But the second thing is like, yeah, no one wants to piss away their alpha by just giving the things they worked long and hard on, and which not only is an insult because like I'm not going to just give you a gift of something that's going to make you money, but it's also like, what if that actually ruins my edge? What if all of a sudden you give it to somebody else, who gives it to the next person, all of a sudden everyone's trading the same thing? But I think this is what it comes down to in the business world. Like in my past life, it comes down to networking, building relationships, and building levels of trust. Like I said, the 4 or 5 people I talk to on a daily basis, like we all, there's a level of trust there that like what I share with them individually stays between us. You know what I mean? And the world is big enough where if like 1 or 2 people or 3 people are trading something similar, it's fine. You just don't want it getting out kind of past that group. But you don't kind of develop that type of trust until you start having, like real conversations, not just like, chatting on Discord or whatever kind of message board you're on, but actually like you and I right now having real conversation or type of thing. And that's where I think you can kind of build that level of trust needed to start kind of being more open with idea sharing. But I promise you, like once you have relationships like that and people that everyone's pulling their own weight, like you all start doing better. Like it's not even a discussion point. So
yeah. And I also think that, so much of success in anything is avoiding stupid things or avoiding mistakes. So if you can help people steer clear of potholes, like helping them no matter what, and
paying it forward is huge. Like I think that there's some of the forums, like there's just channels dedicated to people just like getting feedback, especially like it's usually newer people who are trying to get into it, like getting feedback on their strategies, and it's really easy for someone who's experienced to like look at a back test and tell somebody, here's the 5 things you fucked up, you know what I mean? And like, they don't get upset by that. Like, oh, damn it. And then they learn and then they get better. But everyone was in that point at some point in time. My first week, I was like making all kinds of errors and someone corrected me, and that's why it's interesting, the communities that have kind of come up where everyone is, there's different levels of trust and different levels, but I think everyone's generally wants to help everyone else. You know what I mean? And it's an interesting dynamic. So.
Yeah. Okay. So back to 0-day options, just from a basic level, because so I understand options, I would say at like an intermediate level, like let's call it 6 out of 10. Now, is there anything inherently different about a 0-day option versus just a regular option on Friday? Because so my conspiracy theorist brain assumes that there would be some kind of voodoo with the pricing to screw people over. So like, is there, a 0-day option on Tuesday versus just a regular monthly option or a weekly option on a Friday? Like, is there any difference at all?
I would say the 2 biggest differences off the top of my head, the positive thing is that there's no gap risk, meaning like, it doesn't matter what happened yesterday, like you're going home flat and you start every day flat. So if the major news happens in the middle of the night, it's inconsequential to your portfolio because you don't have anything on. So that's one of the good positives of it. There's nothing worse than like in my days where I used to trade like, middle tier durations and something happens and all of a sudden like you're down a ton, whereas I get to wake up in the morning, not have to worry about it. The trade-off of that is gamma risk. Things move faster and accelerate faster, especially in the last hour of the day. So you have to plan for and expect, potentially wild swings, which I would say that isn't, if you're trying to do this blind, that's a huge issue. But if you're taking the time and care to back test and understand how those things can happen and do more research on how this thing, like what those effects are, you can totally plan around them. So.
Okay. So is 100% of your trading is all 0-day?
Close to it.
Because I'm wondering, like, are you going home flat every night?
There are a few things I do that are, within a week. There are some things, mean reversion things where, in down days, like it doesn't always come back at the end of the day when things go down, but it tends to come back in a few days, So there are some things I do that are outside of the 0-day, but like 98% is probably 0-day. I also still like, I had a background previously before I got into this, like, I do some kind of futures and futures options. I do a little bit of that. Nothing crazy. A lot of, right now you can return stacks in with treasuries. It's free money. So as long as like the rates stay up, that's another kind of aspect. That's more investing than trading really. So.
Okay. So you talked about gamma risk before. So are you like primarily shorting options?
Primarily credit spreads. So directional and neutral, short options, some collecting premium. Correct. I do have some debit strategies though. There are some long vol strategies I use too, but I would say it's probably, 90-10.
Okay. So, when you first started trading options, like were you just trading puts and calls and things like that?
Yes.
Okay.
Yeah, I mean, I learned back in the day, like you hear positive and negatives, but I think it was 2013 or 2014. I learned the basics from watching Tasty Trade. They had like a learning center there, which is really good. They were a client of my old company, which is how I even heard of them, So I learned, and I still think they're one of the best places to learn like the fundamentals of how to like options 101. So I always recommend people still go there and check out their learn center. So
yeah. To T3, we are friends with Tom Sosnoff, who I think he's actually leaving there now.
He left like couple weeks ago. Yeah.
Yeah, I'm wondering if he's going to come back for like round 3, because I mean, he did, he founded Thinkorswim, and these are like crazy businesses to start. Like of all the things you could start, like the amount of financial and legal and like regulatory complexity, like it's amazing. He pulled it off twice. So I'm very curious to see what he's doing next. Okay, now in terms of your trajectory in learning to trade, like did you have to like burn your hand on the hot stove to learn? Because almost everybody I talk to, they had a
I
big.
never blew out an account. I wear that. I don't know. I feel like people wear that as a badge of honor. Like the first time they blew an account out, like I never did. I mean, I've had down days. I think the worst time I had was in COVID, probably. That was when I first learned how uncorrelated things become correlated in chaotic markets. So I had some strangles in currencies, and I was doing a lot of futures kind of options, and I had strangles completely unrelated things, metals and oil, and they all went to extremes, and that was kind of when that's when you learn, like, your trades are never as small as you think. But I survived. It was not a fun, it was not a fun time, but everyone pays their tuition, as we like to call it, in terms of like there's certain lessons you can learn on paper and you can have people tell you, but it's not until you've actually like learned, had everything kind of go to shit at once that you realize what you did wrong. But not to the degree where some of I think you're probably talking about people's stories about like having blown out an account and starting over. Like, luckily, no, that's never happened to me.
Yeah, I mean, from what I see, it seems like most people have to learn the hard way.
Yeah.
But okay, all right. But speaking of chaos, we love to talk politics here, and we're trying to get into sex and religion, but I'm still working on that. But we have Trump in the White House second time around now. Like, at least for your trading style, has the last year been any different? Like, do you view, or at least 2025, is it an outlier year in any way for you?
I don't think so. His tweets definitely move the market, but I think what people forget is there's always something that moves the market. Like, it's not like before he was in office, we didn't have times where crazy stuff would happen randomly during the day. Is it happening? I mean, I haven't done the research to quantify if it's happening more often than less. I mean, it's a hard thing to kind of look into, like how many sudden out of nowhere intraday moves we had. I couldn't tell you. If you go back to what was a Liberation Day, like that was nuts. That was a crazy time. So I won't sit here and bullshit you that no, it's not having an effect, but I do think that he's made it easier for everyone to point at, okay, here's what made everything go sideways, as opposed to in the previous years, it'd always be something else. So. Okay.
Yeah. I mean, because like,
I wish he'd put his phone away and stop tweeting. That'd be great for me, but like, you can't, I'm having a good year, so I'm not going to complain.
I don't, it's like, I think about like that quote, may you live in interesting times. And yeah. I believe it's actually an English translation of a Chinese curse. But yeah, sometimes I wonder, like, does he own stock in Robinhood? Like the volume's going down. It's like,
I don't want to get into conspiracy theories. There's all kinds of like, if you look back, I think there were some questionable trades that happened during one of the Liberation Day announcements or something like that, but I don't want to get into it.
No, yeah, we will. No, but stirring the pot is so much fun. Oh, so
on that, the reason why I say that is not because I don't want to get political or talk about Trump. It's more that I feel like every time anything, even things that aren't that questionable happens, like the traditional Robinhood Wall Street bets, like they just come up with conspiracy theory after conspiracy theory, and it's really baseless. And it's not even, I don't even think half the time there's anything questionable going on, So I don't want to feed into that, because I do think that's pretty normie behavior. So.
Yeah, I mean, sometimes I think it's just algorithms that will you just feed it any random piece of, we could probably do this with ChatGPT, just find any random piece of news and it will wrap it up in a conspiracy theory.
Yeah.
Okay, so are you really paying attention to like day in day out happenings in the market, or or are you just focused on like what your options portfolio is doing?
It's a good question. I don't know how to answer that. I mean, I'm watching the market all day. I'm not. I'm more focused on what it's doing to my account, but at the same time, too, I'm not making any part of being systematic is not making sudden audible changes. You know what I mean? Like I've already determined like what I'm going to do, what the plan is. But it is like I do look at it from the standpoint, okay, if I had a great day, great. If I had a bad day, what made it bad? And is there a way in the future I could test something that might tweak the strategy to make it better? Like you're going to have losing days. So there's no way around it. Like you can't look at every single down day you have and be like, okay, how could I fix this? Like then you're just going to overcorrect and make things worse. but it's still worth testing and seeing how you can make things better. So that's really kind of what I'm looking at. Like, is there a day where I thought, okay, why did I lose money on this day of all days? Like, is there something I could do there? So that's probably what I look at. The only other thing, yeah, I'd say that's about it. I probably am less, since I started doing this, I'm probably less attuned to what's happening to other aspects of the market. Like, I'm watching the SPX like a hawk. I'm watching the rest of the equities, NASDAQ and Russell like a hawk. I'm watching the VIX. I mentioned this when I used to trade more futures. Like, I used to be more attuned to what's happening in gold and soybeans, and like, I don't even know anymore. You know what I mean? It's just not my lane anymore. So.
Okay. So like, do you do long-term investing like as well? Like, do you own stocks like Nvidia or Apple for the long term?
Long term, I actually use futures for long term. So when I now like my I don't really call it, it's not even futures trading. I just use futures to carry long portfolio positions as if it was stock. And I use that way I can return stack from a leverage standpoint. I can also hold treasuries, and I can also do zero DTE trading with the same margin. So
okay. So I mean, so like which futures are you trading, like commodities futures?
No, I mean just ES, Russell, NASDAQ. I'm not trading. It's just I'm just holding long, and I prefer to use futures, even though there's maybe some tax disadvantages to it, but I like it from a leverage standpoint that not leverage, but from a margin standpoint that I can just kind of hold them persistent. So.
Okay, and how long have you been trading? Dealing in futures?
I mean, trading until 10 years. I mean, I got into futures pretty early on. Maybe when I started 2014. We'll say 9 years is probably when I got into futures ago, 2016 or so.
Okay, so when you see things happening in the market, and this is everything ranging from intraday to long-term trends, like, do you care about why?
Do I care about why?
Yeah, no, because I've spoken to people like Jeff Hirsch, who runs the Stock Traders Almanac, and so he's always talking about like market cycles, and a lot of people are obsessed with why things happen and being right about why it happened. Or are you just strictly, all right, my numbers are my numbers?
Yeah, no,
don't care about why.
Yeah, sorry, I didn't get your question at first, but now that you kind of put that context, no, I don't think anyone knows anything. I don't think anyone can, even if you do figure out why something happened, I don't think you're going to be able to predict it again in the future, which is why I just prefer to take strictly a quantitative approach. Like I do zero, I don't know if I said this at the beginning, I do zero discretionary trading. I don't pretend to know what's going to happen next. You don't need to,
Okay, but like when you meet people, like when you're at parties, are people asking you like, hey,
constantly,
what do you
all
think?
the time?
Okay, so if I meet you, hi, I'm James and I'm an options trader. Okay, how is Nvidia's quarter? So like, what do you tell? Because like,
I don't know, man. I don't trade Nvidia. I don't it is funny because I think they think I'm fucking with them. You know what I mean? When I'm like, I don't know, man. I don't even pay attention to that. I think they think I'm joking because I do joke a lot, but no, it's because then you go down the rabbit hole of, oh, so what do you do? And I have to try to explain backtesting and a quantitative approach and SPX options. And like, it's going to like, it kills the conversation real quick. So I usually just change the subject.
Yeah. Well, I mean, it's because I do think with a lot of that is like people are looking for ideas. So if they make money, they can take the credit. And if they lose money, the guy James at a party told me to buy Nvidia and I lost a bunch of money.
So what I did, and I'll plug this, my free newsletter. So in my past, you mentioned this before, I've always been a writer. I've actually had last 2 years, I had maybe 6 short stories in sci-fi published. Before that, I wrote a lot of like probably hundreds of blogs for my old company when I was in the recruiting business. This last week, I finally decided to start writing about 0-day trading. So I've only maybe 3 things so far, but 0 Days to Give is the name of the blog. It's on Substack, but I'm trying to write it in a sense where it's entertaining, engaging, but also explains the why to a regular layperson. They should get interested in options and why this is something they should want to learn about and how they can learn about it. So, because I think that it's too deep of a subject to just try to explain to someone in 5 minutes. But if I can chip away at kind of the core concepts of it, in the terms of a newsletter or blog or something like that, which is what I'm going to do. And that's just my way of paying it forward. Like I look at when I first got into this, I mentioned some of the videos I watched, as well as like the Discord. A lot of people helped me. I had a lot of people kind of give me a helping hand. I would not be here if it weren't for several other people that kind of gave me some guidance. So I just look at it the same way of paying it forward. I'm always happy to chat with people who are trying to get started themselves. I, chat with people online all the time, and I always kind of even offer it up if they ever want to chat live. I'm happy to do that. So it's the kind of guy I am, I guess. I don't know, but I think once you get good at something, you realize like it's a way you can. And maybe this kind of goes back to why zero-day options. I was talking about recycling buying power. What that ultimately means is you can get a higher return in zero-day options than something else because you're able to reuse that buying power fast enough. So you're both able to compound your wealth while also making income at the same time, which is extremely hard to do in investing if you're trying to do anything on like in options trading on a longer term thing. So, but once you figure that out, it's like I have no problem like helping people get to that point where they can start living their life. Like no one works because it's fun. So,
well, I do think there's something to the idea that like I write to find out what I think.
Yeah.
Because I'm writing is my core skill, and a lot of times like I find out if I'm an idiot by writing about something because
you recognize your gaps.
If I have a hard time writing about something, the idea is dog shit, and no matter what, it's not going to work. If it's easy to write, it's a good idea.
This generally is why. Yeah, I agree with 100%. By writing things down, you force yourself to think through where your gaps are, which is also admittedly why I'm writing my blog, is because there's concepts I want to make sure that like maybe I'm actually wrong about something. Like I haven't been able to think this through, but also makes my own kind of thinking more clear. But in my past life, like I'd recognize that where if you're in sales or you're talking to a client or something like that, if you're not able to articulate your ideas when you have the time to write them down, how are you ever going to articulate your ideas to another person? There's going to be gaps or holes there. And I think that the process of kind of going through that, it's makes your own thinking clear. Yeah, I also worry that like this is what AI is going to do to people is it's going to make people not want to write anything and no one's going to ever learn anything. It's going to inadvertently make people dumber. So, and there's a lot of evidence already about that. So
I agree, but AI, I still think domain expertise and authority matter a lot. Like, AI writing. Like, I mean, I think for the average person that hates writing, it's a good thing, because it helps them get it over with. But I don't think it necessarily replaces good writers with good ideas. People, besides, like anybody I know that's good at writing, actually, the writing is the easy part. Ideas are hard, but in general, writing is not. I think for me, writing is like breathing. Ideas, not always.
Yeah, but you do it a lot. You know what I mean? I think I think that people we're getting way off the path here and I love it. I think that if you give people a crutch, they're going to use it. And it's a more important muscle than I think anyone realizes in terms of like their writing ability. It adds so much more to their depth of their ability to explain things to people, their ability to communicate, not just written wise, but verbally. It also, like I said, it makes you kind of think through where you might have gaps and where like you might be making leaps and stuff. And when you rob yourself of that, it's going to shortchange you in the future. It's hard to see in the moment, but that's just my take. And we can move on.
Well, yeah, I mean, like the problem, good luck explaining that to somebody, like if you're a high school kid that doesn't want to write this paper on Thomas Jefferson or whatever. Okay, but there is a closely related topic though. Are you using AI for any of your backtesting or your trading?
So I get this question a lot too. I don't think that AI is. I use AI from the standpoint. Okay, so I have zero development background. I've now written a few basic applications that help me backtest stuff with Claude Code. Does the entire thing for you. I actually think that's a better application for it. But what I think that the key thing with AI is it's not going to help the big players. It's not going to help you come up with trades. It's not going to help you come up with like ideas they're going to win because when you're talking like machine learning has been like prop firms have been using machine learning forever. This is nothing new to them. But for regular people like you and I, it's not going to give you trade ideas. It's going to make you more able to create the custom software you need to backtest or trade or to come up with your ideas and actually execute them to see if they work. So you used to be able to the stuff I'm doing now, it's not very hard, but it would cost me a lot of money to get someone else kind of build it for me. Whereas now it's super cheap. So it's really kind of reduced the barrier to entry for a lot of these types of things. And I would actually anticipate that hopefully even more interesting and good trading software services and stuff like that there comes out in the future, because the ability to kind of develop those things has gone down.
Yeah, I mean,
to develop those things has gone down.
So I mean, you think the main advantage is it's just more accessible? Because I know like hedge funds and quant firms, they have like armies of PhDs.
Yeah.
I even remember once I met a guy who worked at I believe JP Morgan on trading desk. All he did was fix spreadsheets for traders. He was making like over $500,000 a year, because whenever somebody had a meltdown because their formula wasn't working, this guy was such an Excel genius, he could fix anything like on the spot. So yeah, I definitely think
it's leveling the playing. Everyone thinks that it's going to make it more uneven, but I do think it levels the playing ground quite a bit.
Okay, but do you think I still think even to go down that path requires some kind of natural technical facility. Like, for example, if you're not halfway decent with Excel, I can't imagine you going into an LLM like ChatGPT or whatever, or any kind of AI tool, and even being able to put the inputs in. Do you know what I mean? And I still think it requires.
No, you're correct. Like my trading buddy, the one guy I trade with for over 10 years now, like when I first got started, he's actually a data scientist. So the tools he creates, which we kind of share, are way better than the stuff I do, so because he actually has a background and knows how to kind of do some of these things. But it's he's able to put stuff together that normally would have taken him a couple weeks in an hour, which is kind of the bigger difference.
Okay. All right. So if you could go back and give yourself one piece of advice from when you began trading, what would you tell yourself?
It's a good question. I don't know if I'd change anything, honestly. I think I found everything at the right time. I think I did, even before I got into backtesting and 0-day, I did good. I wonder, I think the software and stuff that's come out, I wasn't the first to find it. It'd been out for a few years, and maybe I would have, finding that stuff sooner would have, but I think I was curious and I wanted to learn, and I did, so I guess the advice I would give myself a pat on the back for not giving up, because that would have been the bad move. So,
well, if you never blew up, then you automatically had a higher probability chance of making it, because you were never knocked out of the game. Oh, we're going to end with some rapid fire questions.
Sure.
But if you're enjoying this episode, please like, comment, and subscribe. And if you want to join James's newsletter, it's absolutely free. The link is down in the description below. Okay, James, are you ready?
Sure, let's go for it.
Okay. Should options trading hours be extended?
No, I want to work less, not more.
Not even to 4:30. Just give us a little more wiggle room with earnings and stuff.
No, I don't honestly, I don't care.
Okay. What is your favorite science fiction book and movie?
I would probably go for book. I would go Kurt Vonnegut, and I'm going to say Cat's Cradle. I'm trying my favorite. His favorite sci-fi movie. The original Matrix was great. It gets, you look down on it because the sequels weren't good, but in the moment, great film.
I rewatch The Matrix at least once a year. It is aged remarkably well.
Yeah.
So fantastic. Okay. What do you like more, RoboCop or The Terminator? As a movie, not like Terminator?
Yeah.
I would have guessed RoboCop, because if you like satire, I would have thought RoboCop would come out on top for you. Okay, what is your favorite breakfast food?
Probably an omelet.
Okay, all right.
Eggs every day.
Okay, all right. If I gave you $1 million and you had to put it in something for 25 years and you could not touch it, what would it be?
I mean, am I allowed to just put it in my automated trading?
Anything.
Is that a portfolio? Yeah, I'd put it in a robust 0-day options portfolio
All right,
that
let,
compounds.
let me pull up Venmo account and send you some money. Okay, no. Okay. All right, everybody. Okay, we hope you enjoyed this episode. Again, comment, like, subscribe. If you're listening on Spotify, hit that follow button. James, do you have any final words for our beautiful audience out there? Besides, subscribe to your newsletter. The link is down below. James, do you have any parting words?
Yeah, subscribe to the newsletter. Hit me up. LinkedIn is where, strange enough, where I'm most active because of my old life. So James Hornick, I'm easy to find on there. I'm on Twitter too, but I don't really, that place has become a cesspool. So, but yeah, hit me up. Happy to help if I ever can.
Awesome. Thank you.